Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Renaud Laplanche, co-founder and CEO of Upgrade, a consumer fintech company offering credit, banking, and payment products designed to help customers manage debt more effectively. Since launching in 2017, Upgrade has helped more than 7.5 million customers access over $42 billion in credit through personal loans, credit cards, and checking accounts. The platform focuses on fixed-rate products and incentives that encourage responsible borrowing and long-term financial health. Before founding Upgrade, Laplanche co-founded and led LendingClub, one of the earliest large-scale online lending marketplaces in the United States. He led the company for a decade and took it public in 2014, marking the largest US-based internet IPO that year. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Renaud, great to see you. Thanks for taking the time.
Thank you for having me.
We're going to try to make this interesting because you have a lot of great milestones in your professional life. Obviously, an Upgrade is performing extremely well. 1999, you're an associate at Cleary, and you decide to found a company. It's not often that you see that transition. I'm curious what gave you the confidence to say, okay, my new path will be as an entrepreneur.
Oh, I haven't thought about this in so many years. I think I've always wanted that. I was really enjoying being a lawyer, but as a lawyer, you make other people's businesses better. You don't create anything from scratch. And I had this urge to really do something that could make a lasting impact and make the world better in some way.
And so that company was eventually acquired in about 5 years or so by Oracle.
That's right. Yeah, and that's when I moved to the West Coast. As part of the deal, I had to stay with Oracle for 1 year at least to relaunch the Matchpoint was the name of the product, relaunch that as an Oracle product and retain the team and oversee the integration. So that's when I moved from New York to the West Coast.
And then when you became famous in the FinTech world, it was LendingClub. And how did you come up with the idea? I mean, I think there were things happening in the FinTech world at that time where maybe there were a few people doing the same thing.
That was very, very early. So 3 companies started around the same time doing something similar. There was Zopa in the UK, Prosper and LendingClub in San Francisco. And what gave me the idea was really sort of looking at the credit card statement and realizing that if I was going to carry over the balance on my credit card, I'd be paying 18% interest rate. So I opened the credit card statement, really paid attention to it for the first time. But then the next piece of mail I opened was my savings account statement, where I was earning 0.5% on my savings. I was really struck by the spread between these two rates. I thought, okay, why is it that if you essentially lend money to the bank, they pay 0.5%, but if you borrow money from the bank, they charge you 18%. So it felt like a big spread. And so LendingClub was really the basic original idea was to compress the spread by taking the banks out of the equation as an intermediary and let regular people lend money to other people. So I had the idea in 2006, launched in 2007. So that really started together with Zopa and Prosper, the person-to-person lending industry that then became sort of marketplace lending.
And, you've remained in this space of personal loans. Tell us about the nuance of Upgrade to what you'd done previously.
Yeah, so I think LendingClub and Upgrade sort of tracked the broader evolution of FinTech, where the first generation of consumer FinTech companies were often focused on a single product. And really the game there was build credibility, establish FinTech as a credible alternative to the banks. So you focus all your resources on one product, doing as well as possible, and with that one product. And I think that battle was largely won by FinTech. And so that really gave birth to a second generation of FinTech companies where you've seen a broader scope, more ambitious goals of really capturing more of the personal finances of our customers. So you see sort of neobanks and very diversified FinTech companies like Upgrade that offer multiple products. And in our case, are able to help our customers both in their sort of day-to-day financial life with checking account, savings account, and credit cards, everyday products. Will also be available when our customers have bigger financial decisions to make and when they're renovating their home or buying a car or going on a trip and need these larger loans.
And is it that you understand the customer, so the target segment where upgrade's most relevant? Is it that your technology has a way to provide them the best solution ultimately?
Yeah, I mean, there's a lot of product innovation and technology-led innovation, certainly. But some of it is just coming up with products that didn't exist before, right? So if you take one card, it's the only card that gives you the functionality of a debit card and a credit card at the same time. And it's really sort of going back to like being a consumer and what do I want as a consumer. And there's no reason as a user that to carry two cards, debit and credit. You want to be able to sort of allocate expenses. So we have a single card and you can use it for pay now or pay later. And pay now would be like a debit card. It's debited from your bank account. And pay later, you're going to spread that payment over several months. So it's very convenient. You get all your expenses for one card into one single statement. You can see it all. And because of the way the card is built, you get basically rewards, cashback rewards that are credit card rewards. And you also get it on the debit-like portion. So for consumer, it's almost like getting credit card rewards on the debit card, which is a really nice perk.
And is that one of the primary drivers to the loan volume?
It's just one example of product innovation. At the end of the day, it's having that diversity of product and acquisition channels is really what drives a lot of the growth. I mean, from a consumer standpoint, they know that upgrade isn't just a like one-time transaction, but they're really getting a sort of long-term financial partner on their side. So we have 7.5 million customers now. On average, each customer has more than two products with us. So we're really seeing a sort of broad adoption, and part of that multi-product strategy, part of its impact, it's really that. It's really sort of making it more attractive for consumers who will have sort of all their data in one place. They know they'll get a better deal because they're already a customer. So it's sort of like relationship banking, but fast forward to the digital age.
And when you think about the target customer, is it within a band of FICO score, or how do you identify who's the most appropriate for the platform?
Yeah, it's very broad. So we like to make products that are appealing to a broad range, a broad swath of the population. I mean, our average FICO is around 700, which is about the population average. But we have customers from 580 to 850. Same in terms of income range, demographics, all very broad. So we have different products that cater to the needs of specific segments. But generally, we want to build a mainstream consumer brand. So we want to have mainstream appeal.
And then on the back end, is there kind of a set of banks that you work with that are the ultimate holders of the loan?
Yeah, in a couple of ways. I mean, we have issuing banks that sort of help originate loans. We have a custodial bank that will take custody of deposits and then provide FDIC insurance. And we also have loan buyers, and they can be banks, credit unions, asset managers, securitization structures. So we've done over 42 billion in loans, including 10 billion just this year. And so there are a lot of buyers for that type of volume. So we have over 250 different loan buyers. Again, could be banks, could be asset managers. The range, the diversity of these buyers is also what helps us be full spectrum on the consumer side, because small banks and credit unions are going to have more appetite for lower yield, lower risk type of loans, higher FICO, higher income. But asset managers and securitization could be a way to get the right type of capital, more risk tolerant capital, but chasing higher yield for the near prime population.
And is it such that your technology algorithms are able to price the loans more competitively, such that the borrower can more often than not say, I get the best rate at upgrade?
Yeah, it's a combination of all that. I mean, it's the algorithm, it's the breadth of the data that we ingest. We have over 40 million people who've applied for loans, and 7.5 million customers across 6 different products. I think we have probably a broader set of data than most. but it's also for our existing customers, really taking into account the greater depth of data, right? So if a BNPL customer who's already got a couple of BNPL loans from us, when they ask for a personal loan, we know a lot more about that customer and we can probably give them a better pricing.
You're now on to your third successful company. I'm wondering if you look back at the first time you went about building a business, what is just inherently much easier now just because you've been through it so many times? Meaning you can build a company much faster, I would think, like, in this era than in your earlier professional era.
For sure. I mean, technology has improved greatly, for sure. I think FinTech in particular is more of a sort of established field now. So when you're trying to recruit new team members, you have people with actual FinTech experience, which you didn't have 20 years ago. And then, so in our specific space in terms of making loans online, being an online and mobile loan originator and servicer, I think we've learned a great deal over the last 20 years. So all that knowledge, all that experience is really helping us sort of better understand what consumers want and need, but also how to sort of better sort of package loans and bring sort of more capital to the space.
Mm-hmm. You have some great investors. You've raised hundreds of millions of dollars, marquee names. You just closed your Series G. Congratulations, Neuberger Berman.
Thank you.
Tell us about how you go about selecting, how you've gone about at each maybe level or series. What do you look for in an investor?
So it's really about, I think, as a firm and the specific sort of team or individual within the firm. So in terms of firms, I mean, we like to work with people who have deep pockets, who don't have a short-term time horizon, who will be patient and realize that we want to build a sort of mainstream consumer brand. It's not going to happen overnight. So it's going to take time, and we need the type of investors who can afford to be patient and to invest in the long run. And then in terms of a sort of specific team or individual, where we want people we can have a good relationship with, who are going to be long-term partners, and are going to find the right balance between being helpful, but also not standing in the way. And it's hard for investors to find the right balance.
Mm-hmm. And is the vision here that you continue to scale this, the loan volume goes up and you go public?
Yeah, certainly going public is part of our plans. It's part of growing up as a company, as a startup. And yeah, I think we're well on our way. I mean, we recently exceeded $1 billion in revenue, which was a great sort of milestone to go through. We've been sort of cash flow positive already. So I think we have a lot of attractive features. We've been growing fast, 30-40% year over year. So yeah, we're excited about at some point in the future being in the public market again.
Do you have a general philosophy around hiring key talent?
Yes, hiring good people and empowering them to make good decisions. No, I mean, it's being facetious, but it's really a key part of a CEO's role. I mean, sometimes you think of recruiting as a distraction to your day-to-day job, but it shouldn't be a distraction. It should be your day-to-day job. So building a team, especially as a company gets bigger, is the most impactful thing you can do as a CEO. I mean, it's hard as an entrepreneur, right? You want to continue to work on product and you want to continue to work on all these things you did in the early days, and you just can't. I mean, the role is changing as the company scales. When you have 2,000 people, you can't do things anymore. The most impactful thing you can do is hire great people and setting up all the processes and all the information in a way that empowers them to make the best decision they can.
Is there one characteristic or quality in a candidate that you look for?
I think it's important to sort of separate the sort of skill set and experience that you need from the cultural and personal fit. I think both are critical, but it's really important not to conflate them and keep a clear mind. And the fact that you like a candidate personally doesn't mean that person will be the best candidate for the role. So it's really important to have a point system or some analytical way to think of, is that person the best person for the role in general, but then is that really the best person for Upgrade?
Mm-hmm. Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, I think probably my sailing coach when I was growing up. He really taught me how to make good decisions under pressure based on imperfect information, which is something you got to do every day as an entrepreneur. And certainly you do a lot in sports and in sailing in particular.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yeah, I'm spending quite a bit of time these days with the Southern Poverty Law Center. We have tons of great initiatives in terms of social justice. Part of social justice, people don't pay enough attention, in my opinion, like voter suppression, these type of issues.
Renaud, thank you so much again for taking the time. It's been a pleasure speaking with you.
Thank you. Thank you for having me.